Good afternoon, and this is Janice Jimenez, your real estate gal. This afternoon's presentation is how to choose a home mortgage lender. This information is brought to us by the Free Press. Asking about the lender's Home Mortgage Disclosure Act or HMDA compliance audit process will clear how they operate and whether they meet all the required standards. Checking with the consumer protections and reading reviews from other clients can determine the lender's experience and reputation. In case of specific requirements or preferences, it's important for the lender to be able to accommodate them. Before signing any contracts, the borrower must make sure to know all the terms and agreements and to ask questions until everything seems right. The borrower should be aware of the hidden fees such as application, processing, or closing fees to know the exact total cost of the agreement. Choosing between an adjustable rate and a fixed rate is also important since the fluctuations of the market can affect the monthly payments of the loan. Ask your real estate questions and home loan questions to me, Janice Jimenez, your real estate gal, always here for you.
If you're in the market for a new home or refinance, you're probably hearing a lot about mortgage interest rates. And you probably think, the lower the rate, the lower my monthly payment. But the truth is, the lowest interest rate doesn't always mean the lowest payment. For starters, there are closing costs. So a lender may offer a low interest rate, but make up for it with additional fees that can really add up. Then there's mortgage insurance, or MI. If you're planning on putting less than 20% down on a home, MI will likely be required. And MI has an interest rate of its own. But here's the good news. By getting a lower MI rate, even with a higher interest rate on your mortgage, you can actually end up with a lower monthly payment. And in the end, it's the amount coming out of your bank account each month that matters most. So, when you're shopping for a mortgage, don't just look at interest rates. Find out how much we can save you. Let's talk today.
Putting together the pieces of a retirement plan traditionally consists of Social Security, personal savings, and pensions or retirement funds. Today, more and more retirees are adding another important piece to their well-structured retirement plan: the equity in their home. In fact, older American homeowners have accumulated over $6 trillion in total home equity, representing over 80% of their overall net worth. There's no question that a home equity line of credit is an important piece of a comprehensive retirement plan, but not all home equity line of credit loans are the same. If you are 62 years or older, here's some good news. You may be eligible for a home equity line of credit with enhanced benefits. It's called a reverse mortgage line of credit loan. Over 1 million savvy Americans have taken advantage of the significant benefits of a reverse mortgage, and that number continues to grow. And there are several major benefits of a reverse mortgage line of credit. The primary benefit is flexible payment options. A reverse mortgage line of credit gives you more flexibility and control of your finances than a traditional home equity line of credit, and here's why. With a home equity line of credit, once you start to draw down on your line of credit, you're required to make regular payments, which increase as you draw additional funds month after month. For a while, that payment may be interest only, but after a set period of time, you'll have to start paying back the principal as well, which will make your monthly payments substantially higher until your loan is settled. With a reverse mortgage, you have a flexible payment option, and that means you can choose to pay as little or as much as you like each month for as long as you live in your home. If you'd like to pay down the principal and interest of your reverse mortgage early, feel free to make monthly payments of any amount you'd like with no prepayment penalties. Or use the benefit of a reverse mortgage line of credit and take advantage of the flexibility to make no monthly payments at all. That's right, no monthly payments at all. Of course, as with any home secured loan, you'll still be responsible for paying property taxes, homeowners insurance, any association fees, and maintaining your home in good shape. The bottom line is that a reverse mortgage line of credit puts you in control of your monthly payments, allowing you the flexibility to manage your cash flow. And there are even more benefits, like the line of credit growth feature. Once you secure a traditional home equity line of credit, the total amount you can borrow is set at the time of the signing of your loan. But with a reverse mortgage line of credit loan, the unused portion of your credit line actually grows over time, independent of your home's value. That means that the less you take up front, the more you'll be able to borrow later. As long as you meet your loan obligations, your reverse mortgage line of credit can't be reduced or revoked by the lender. For even more flexibility, you can choose to convert the line of credit into regular monthly installments at any time in the future. This is a great feature for funding home health care or the need for consistent monthly cash flow. And there's more. As opposed to a home equity line of credit, a reverse mortgage has something called a non-recourse feature. This ensures that you'll never owe more than your home's worth. And the last big benefit? You can enjoy the security of knowing your reverse mortgage is insured by the Federal Housing Administration. Flexible payments, credit growth, payout options, non-recourse, security. A reverse mortgage line of credit all builds to one big benefit: control over your finances. So if you're 62 years or older, a reverse mortgage line of credit loan could be the right choice for you.
If you're a realtor or seller and you'd like us to feature your home in our show, please give us a call at 1-833-33-REGAL or email us at info@regal.realestate. And remember, we also buy ugly homes.